Morning. Just bringing up the live stream. My machine's got a lot going on, so it's slow as molasses. Oh yeah, well the news is out for sure. Yeah, so right now I got almost no resources on my machine. Sorry. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, it's not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money cannot afford to lose. Hang on. Yes, I like to watch pretty girls on sailboats and pretty girls playing guitar and pretty girls playing drums and pretty girls cooking. As you can tell by my YouTube results.
See growth declining at an unprecedented pace in the second quarter of this year, before rebounding again in the second half.
I'd just like to thank Traders Way for sponsoring our Forex.Today YouTube community. Thank you, Traders Way.
Nonetheless, the projections entail a substantial downward revision to both the level of economic activity and the inflation outlook over the whole projection horizon. Though the baseline is surrounded by an exceptional degree of uncertainty.
Yeah, Baby G. I would say
while
every time is more important.
Is suppressed by lower energy prices.
So, if you're not on the planet, let me get you up to speed. We expected 500B, they gave us 600B.
Decline in real
They're
GDP
bailing out
and
Italy's
the
bond
associated
market.
significant increase in economic slack.
Welcome to Earth.
In line with its mandate, the Governing Council is determined to ensure the necessary degree of monetary accommodation and a smooth transmission of monetary policy across sectors and countries. Accordingly, we decided on a set of monetary policy measures to support the economy during its gradual reopening and to safeguard medium-term price stability. First, the Governing Council decided to increase the envelope for the Pandemic Emergency Purchase Programme, also known as PEP, by 600 billion euros to a total of 1,350 billion euros. In response to the pandemic-related downward revision to inflation over the projection horizon, the PEP expansion will further ease the general monetary policy stance, supporting funding conditions in the real economy, especially for businesses and households. The purchases will continue to be conducted in a flexible manner over time, over asset classes, and among jurisdictions. This allows us to effectively stave off risks to the smooth transmission of monetary policy. Second, we decided to extend the horizon for net purchases under the PEP to at least the end of June 2021. In any case, we will conduct net asset purchases under the PEP until the Governing Council judges that the coronavirus crisis phase is over. Third, the Governing Council decided to reinvest the maturing principal payments from securities purchased under the PEP until at least the end of 2022. In any case, the future roll-off of the PEP portfolio will be managed to avoid interference with the appropriate monetary policy stance. Fourth, net purchases under our asset purchase program will continue at a monthly pace of 20 billion euros, together with the purchases under the additional 120 billion temporary envelope until the end of this year. We continue to expect monthly net asset purchases under the asset purchase program to run for as long as necessary to reinforce the accommodative impact of our policy rates and to end shortly before we start raising the key ECB interest rates. Fifth, we intend to continue reinvesting in full the principal payments from maturing securities purchased under the APP for an extended period of time past the date when we start raising the key ECB interest rates, and in any case, for as long as necessary to maintain favourable liquidity conditions and an ample degree of monetary accommodations. Sixth, we decided to keep the key ECB interest rates unchanged. We expect them to remain at their present or lower levels until we have seen the inflation outlook robustly converge to a level sufficiently close to but below 2% within our projection horizon, and such convergence has been consistently reflected in underlying inflation dynamics. Together with the substantial monetary policy stimulus already in place,
So the real juice
today's
happens
decisions
when
will support liquidity,
she does the
and
Q&A, so
funding
she screwed
conditions
up
in
last
the
time, if
economy.
you remember.
help to sustain the flow of credit
You guys
to
remember how
households
she screwed up
and
last time?
firms, and contribute to maintaining favourable financing conditions for all sectors and jurisdictions in order to underpin the recovery of the economy from the coronavirus fallout.
No,
At
PM,
the same time,
I'm not saying
in the current
with the
rapidly
old
evolving economic
1.35 is
environment,
the
the Governing
with the
Council
old
remains fully committed to
plus the
doing
new. I'm
everything
talking just
necessary
about the
within its
plus new.
mandate to support all
Instead of adding
citizens of the euro
500, they
area
added 600.
through this extremely challenging time. This applies first and foremost to our role in ensuring
This
that
has
our
to do with her
monetary
mistake.
policy
Does
is
anyone
transmitted
remember her
to
mistake
all
last
parts
time?
of the economy and to all jurisdictions in the pursuit of our price stability mandate. The Governing Council, therefore, continues to stand ready to adjust all of its instruments as appropriate to ensure that inflation moves towards its aim in a sustained manner in line with its commitment to symmetry. Let me now explain our assessment in greater detail, starting with the economic analysis. The latest economic indicators and survey results confirm a sharp contraction of the euro area economy.
No, it's in the Q&A. It's
rapidly
always in the
deteriorating
Q&A,
labour
guys, not the
market
written
conditions.
speech. That's right, baby.
Coronavirus pandemic
Baby's
and
got
the
it.
necessary containment measures
She's not
have
responsible for
severely
narrowing
affected
spreads.
both the manufacturing and the service sectors,
So
taking a
guess
toll
what
on
just
the productive
happened
capacity
in
of the
the
euro
last
area
half an
economy
hour after
and
they
on
announced
domestic
their
demand.
new policy?
In the first quarter of
Italian
2020,
bond yields dropped
when
by
containment measures
50%.
were only in place from mid-March
Uh-huh.
in most countries,
Oh yeah.
euro
One more
area
time.
GDP decreased by 3.8% quarter on quarter. Information from surveys, high-frequency indicators, and incoming hard data all point to a further significant contraction of real GDP in the second quarter. Most recent indicators suggest some bottoming out of the downturn in May
Buddy.
as part of the economy gradually reopens. Accordingly, euro area activity is expected to rebound in the third quarter as the containment measures are eased further, supported by favourable financing conditions an expansionary fiscal stance
Exactly,
and a
MT.
resumption in global activity, although the overall speed and scale of the rebound remains highly uncertain. This assessment is also broadly reflected in the June 2020 Eurosystem staff macroeconomic projections for the euro area. In the baseline scenario of the projections, annual real GDP is expected to fall by 8.7% in 2020 and to rebound by 2021 to 5.2% and by 3.3% in 2022. Compared with the March 2020 ECB staff macroeconomic projections, the outlook for real GDP growth has been revised substantially downwards by 9.5%.
35 to 50 hours of training courses are a little more detailed, Master Trader.
And has been revised upwards by 3.9 percentage points.
The training course which is included that follows the book is something like 8 hours long.
Given the exceptional uncertainty currently surrounding the outlook, the projections also include two alternative scenarios, which we will publish on our website following this press conference.
Gotta
In
tweet
general,
that.
the extent of the contraction and the recovery will depend crucially on
It's weird. I have an i5 processor, which isn't that great, but I have 12 gigs of RAM, which is pretty good. I have 1,000 megabits per second. But anyways, but I got a lot running in the background. Did it stop for everybody? Or it's just I have terrible resources right now. My processor's overloaded. Think, how do I get the honey from the honey pot? Oh well, she wasn't saying anything anyway. Woo-hoo-hoo! The wonderful thing about the ECBs is they're the only one. Woo-hoo-hoo! Yeah, time to upgrade. The thing is, I hate spending money. I love making money. I hate spending it. Yeah, so is it really truly me? I guess so. Or is it them? Did it stop for anybody else?
assessment is also reflected in the June 2020 Eurosystem staff macroeconomic projections for the euro area, which foresee annual HICP inflation in the baseline scenario at 0.3% in 2020, 0.8% in 2021, and 1.3% in 2022. Compared with the March 2020 ECB staff macroeconomic projections, the outlook for HICP inflation has been revised downwards by 0.8 percentage point in 2020, 0.6 percentage points in 2021, and 0.3 percentage points in 2022. Turning to the monetary analysis, broad money, M3, growth, increased to 8.3% in April 2020 from 7.5% in March. Strong money growth reflects bank credit creation.
You guys remember your M1, M2, M3? No, they're not pivot points.
Liquidity
they're measures of liquidity.
Moreover, high economic uncertainty is triggering a shift towards money holdings for precautionary reasons. In this environment,
Well, the funny thing, Mr. Connor, over the years, I've had
M1,
$500 computers and I've had
encompassing the most liquid
$5,000
forms of money,
computers, and
continues to be the
there's
main
very little
contributor to
difference
broad
between
money
the two.
growth. Developments in loans to the private sector continued to be shaped by the impact of the coronavirus.
Good, Cave. That shit's dangerous.
The
Gotta ban
annual
that.
growth rate of loans to non-financial corporations rose further to 6.6% in April 2020, up from 5.5% in March, reflecting firms' need to finance their ongoing expenditures.
No, Grumpy Cap.
and working
Next update
capital
it will
in the
be.
context
But
of
the bias
rapidly
pivots are in
declining
there.
revenues. At the same time, the annual growth rate of loans to households decreased to 3% in April from 3.4% in March, amid consumption constraints due to the containment measures,
Boo dies
declining
going for it.
confidence, and a deterioration of labour markets. Our policy measures, in particular the very
Right on,
favourable
Mac.
terms for our targeted
on,
long-term
banks.
refinancing operations, should encourage banks to extend loans to all private sector entities.
Banks, did we meet in South Africa?
Together with the measures adopted by national governments and European institutions, they support ongoing access to financing, including for those most affected by the ramifications of the coronavirus pandemic. To sum up, a cross-check of the outcome of the economic analysis with the signals coming from the monetary analysis
Not a lot of banks going around, that's
confirm
what I
that
thought I'd
an
ask.
ample degree of monetary accommodation is necessary for the robust convergence of inflation to levels that are below but close to 2% over the medium term. Regarding fiscal policies, an ambitious and coordinated fiscal stance remains critical in view of the sharp contraction in the euro area economy.
You know what I like about Lagarde, and I
Measures
always
taken
have,
should
just
as
the way
much
she
as
just
possible
did
be
that.
targeted and
She's
temporary in
tough
nature
as nails.
in
She's probably
response to the
very
pandemic
difficult to work
emergency.
for. Probably demands
three
perfection at
safety
every
nets
level.
endorsed by the European
But she's
Council
very feminine.
for workers,
She doesn't have to
businesses
be a
and
man in a
sovereigns,
man's world.
amounting to a package worth
I like that about her.
540 billion euros.
I've always
provide
liked strong
important
women.
funding support in this context.
I think she's really cool.
At the same time, the Governing Council urges further strong and timely efforts to prepare
Thank you,
and
Boo.
support the recovery. We therefore strongly welcome the European Commission's proposal for a recovery plan dedicated to supporting the regions and sectors most severely hit by the pandemic, to strengthening the single market, and to building a lasting and prosperous recovery. We are now ready to take your questions.
Yeah, all right, here we go.
Myself or
Get
to the Vice President?
ready to rumble!
Good afternoon, and thank you for taking my question. First question is about.
I'll go with the
composition
lady in the
of
pink.
PEP. I'm wondering if you've discussed including junk bonds into PEP, and if not.
See,
why not,
first
given
question,
that
junk
your
bonds.
own
They
stability
bailed out
report
Italy is
highlights
what
the
happened.
risk of downgrades to stability. The second question is about the German Constitutional Court's ruling, and I wonder if you've discussed this at all. You've of course said that you fall under the jurisdiction of the ECJ, but Ms. Schnabel said that the ECB can be constructive in this process. So what precisely does constructive
No
mean
random,
in this
there's no
context?
delay. It's just whatever
Are you prepared to
latency
do?
YouTube
Are you
has.
prepared to take a fresh governing council decision as the Constitutional Court is asking you to do? Thank you.
Thank you very much for your two questions. On your first questions, which has to do with whether or not we include junk bonds, as you call them, in our purchase policies. We
Here
have
comes.
defined parameters for our purchases. We want to insulate the way we conduct policy from the effect of the pandemic and avoid self-fulfilling procyclicality. So we will continue to observe the situation and take appropriate and proportionate action.
Yeah, it might be
Aside
there
from that,
random,
the
but
Governing
it's not
Council
something
has
I
not
added. You can do
discussed,
that, but it's
this
not
matter.
something that I do.
On your second point, which has to do with the Karlsruhe court decision, I just want to remind you that the ECB is subject to the jurisdiction of the Court of Justice of the European Union. The PSPP has been judged by the Court of Justice of the European Union as, I quote, in line with our policy mandate. We have indeed taken note of the judgment, which is directed at the German government and at the German parliament, and we are confident that a good solution will be found. A good solution that
This
will
is Fib
not
Wars. This is where
compromise
Bear would do it
the
off the
ECB's independence,
1250.
will not compromise the
This is
primacy
where bears
of
live.
the European Union
And
law
I already did bulls for
or
you.
the ruling of the European
right here.
Court of Justice.
That's where bears live. There's
You
where
follow
bulls
what we
live.
do. The ECB Governing Council regularly assesses the effectiveness, the efficiency, and the cost-benefit of its monetary policy measures. It does so on a regular basis, and as you can imagine, given the package that we have debated and eventually discussed and agreed upon, this has been the case in great depth during the course of our morning session. It is typically reflected in our accounts, and it will indeed be reflected in our accounts as well. Thank you.
The next question from Mr. Skolimowski from Bloomberg.
Scully!
Good afternoon, Madame Lagarde. My first question is about... Can you hear me?
I said good afternoon.
Hello?
Yes.
Oh, good afternoon. Hello. Yes, so my first question. Some of the reports before the meeting suggested that not all of the members of the Governing Council were ready to support an increase in PEP today. Can you give us a sense of how wide was the support for the measures you adopted? And my second question is about your strategy for reinvestment under PEP that you announced today. You say they will continue at least until the end of 2020. So essentially, if everything goes on according to the plan, the roll-off of those purchases could start at the beginning of 2023. Meanwhile, the guidance for PSPP program says reinvestments will continue past the date of the first rate hike increase. So there is a discrepancy between these two programs when it comes to the guidance for reinvestment. Does that imply that the roll-off from PEP could actually start before the first rate hike? Thank you.
Well, you know, your question helps me reframing a little bit for you the cost benefit, and I was tempted to say the benefit cost because there are a lot more benefits than cost of the our PEP. First of all, I would observe that the PEP has already demonstrated that it is a very successful program.
Yeah, it has.
It has prevented, when we used it, actually very shortly after we announced it on the 18th of March, it has prevented the downward spirals in financial markets and reduced any tail risks at the time, without which we would have been in a seriously different situation in terms of both growth and inflation outlook. There are two main factors that have led us to reconsider PEP and certainly expand the size of PEP as well as its duration. The first factor is that the outlook for price stability has been significantly affected by the fallout from the COVID-19
So right now
crisis.
we're just bouncing. These
As
are
I
Fib
mentioned
Wars.
earlier
This
on, we
is
had
the
to
618.
revise
That's
our
the
inflation
618.
outlook.
Bulls are
And
buying,
if
bears
you
are
look at the
selling, everyone
medium-term
else is
horizon of our
losing money.
projection, which is 2022, we're now talking about 1.3 as opposed to 1.6, which was the horizon that we had back in March prior to the COVID-19. Second factor that has also led us to reconsider PEP and to increase its size and extend its timing is that financial conditions for the euro area as a whole are significantly tighter today, as measured by average sovereign yields and broader metrics of financial tightness, in a situation where the economy needs easier conditions to achieve price stability. So in that context, we judged that it was necessary to increase the size. And I can assure you that there was a unanimous view in the Governing Council that action had to be taken. In the face of that inflation outlook, and given our mandate of price stability, action had to be taken. So we decided to increase the size of PEP in order to, number one, ease aggregate financial conditions, number two, safeguard the transmission of our monetary policy
We have to understand them all, Master.
all asset classes and jurisdictions thanks to one particular aspect of PEP, which is its flexibility in conducting our purchases. And three,
Because it's all
help
about
us
interpreting the data, but if you don't understand all the data, then it's going to be difficult.
back to what I would call the pre-COVID inflation path. So
My next move is to create
that
courses with
justified
textbooks
fully
and
the
like give you a
expansion
college
of,
level education on
PEP.
macroeconomics.
by the amount that I have mentioned, which is 600 billion
So I thought what I'd do is I would design
Why did we extend
an
the
economics
horizon
class
to,
for
June
financial
of 20,
traders
21? It's certainly
and
because
design
we have
it
a
for
sense
college
that by
level.
then,
In fact, I'm going to
inflation
pitch it to
hopefully will
Harvard
start
and teach it
kicking
at Harvard,
in
but I thought I
again,
would build it
and
first
we will
and
have a better visibility
teach you guys
of
get
the
good
situation
at
that
it,
point in
and
time.
then swing it over to Harvard and
It's
teach
also
there.
coherent
Maybe
with
do like a summer school
a lot
class.
of
So
our
when trading
other
is slow and
monetary
boring,
policy tools, those
I'll just
that we
move
have
to
either
Cambridge
determined in
and,
March or
teach
fine-tuned and improved at our last
macroeconomics
April monetary policy
in financial
Governing
market
Council meeting.
to
So in
to
terms
Harvard.
of
I think that'd be a fun thing.
reinvestment
So,
that we have agreed
but
to
it'd have to be proper with
push at
papers
least until
and
the end of 2022.
examinations and
we have determined that because it helps ensure that financial conditions remained sufficiently
it'd be cool to have
supportive
proctored
over a
exams and
possibly
stuff.
very protracted recovery phase. And it also reflects the nature
Sup,
of
Lugo?
PEP, which is different from the PSPP.
Rolu.
So if only for these two reasons, we believe that giving a bit more visibility and certainty over that horizon was certainly a good decision to make.
The next question will go
You know,
to
I wore a
Annette
pink suit
Weisbach
like that to a
from
board
CNBC,
meeting, and it was
please.
really awkward.
Thank you very much. Do you hear me? Good afternoon.
Yes, we can hear you.
Okay, that's great, because we had problems last time, so I wanted to make sure. My first question is the size of the PEP program. Why you have agreed on raising it by 600 billion and not more?
Whoa.
Because if you keep the current pace, that
Sav,
would mean that it is
Harvard professors don't get
used
rich
up by
teaching
February
at Harvard.
2021. So question here, what made you decide on that ticket size? And then also on the interest rate, because you're keeping the interest rate downward bias. So can you perhaps reconfirm that you think it's not the end where we are currently, that the negative, the lower bound has been reached? And what would you make?
Yeah, well, that's the
what
thing. You
would
don't do
have
it for
to
money.
happen to cut interest rate even
They're like,
further?
honestly, for a summer school, honestly,
Thank
I
you
think a
very much for your
professor makes
question.
like
First
10
of all, on
grand,
the,
12 grand
the
or something.
choice of 600.
And you're like,
Obviously,
even
there
know
was
if
a
that pays
debate
your
within the
rent.
Governing Council as to what would be the appropriate size. But we collectively determined, and there was broad consensus around that proposal, we collectively determined that the 600 billion should bring us over time significantly closer to what I have called the pre-COVID inflation path, while allowing
probably had
us
to do with,
to monitor how some key
trade
developments
journaling,
unfold
Master
in the
Trader.
coming months that will indeed impact our policy. So we will understand a little better how the economy rebounds in the third quarter and then later on in the course of the coming months to have a bit more clarity, because of course we have better data better.
so you guys are
better
interested
number,
in a
and we
class
can
like
come up
that.
with,
Well,
some,
if I pay thousands
more
and thousands of
reliable
dollars
scenarios
per
and even
class to
projection,
Harvard,
but it is
and
still
then I
surrounded
have to
by
order
a lot of
$600 in
uncertainty.
books.
And we believe that will.
And I was going to teach you something
bring
very
us,
similar.
as I said,
What should the price be?
significantly closer to that path of
And
the
should you be required to
COVID,
buy
inflation.
$600 in books for the class?
Second, I just want to remind you that we have decided to use PEP, but it's not as if it was PEP and nothing else. We have a whole package of tools that we are using to great extent, addressing all all sectors of the economy, all axes of our action. And I'll just remind you that, for instance, we start with a very low interest rate, which is associated with
gains
forward
like
guidance,
never.
which, as you will have
Right.
noticed, have not,
Well, that's
has
what I'm
not
saying.
changed, as indicated in the introductory statement. We are also using, and we
Well, it
will
would
be
be
seeing
online, of
very
course.
interesting
Don't be-
developments
don't be
in
silly.
June.
Don't be
The
silly.
TLTRO, targeted long-term refinancing operations, which are really offered to the banking sector at extremely attractive terms. Again, to remind you, if banks keep their exposure to the economy and keep lending, particularly to the corporates, but also to the SMEs and to, all the family of borrowers around, in that case, then they can obtain an interest rate which is minus 1%. So that's also a major tool to make sure that the economy really is flooded with the
So the
credit
interesting
capacity
thing,
that
like
banks can,
money is so
intermediate.
opposite of what we've been
I
taught.
also would like to remind you
she's
that we
talking
have,
about like
a
interest
liquidity
rates being
facility, which
effective
is the
interest rates being
LTRO,
negative
which has
1%.
operated as a
So
bridge, which will
when the
now
economy
be
is bad,
supplemented
rich
by
people
a
borrow money
LTRO,
like
which is
crazy.
pandemic specific, and
You have
which
to
will
understand
also
they don't
operate
own
as
anything.
a-
They own, right?
a
They own
liquidity
businesses, they own
facility that
assets.
is available for those of the banks
But they
that do
don't
not
really
want to
own
necessarily use
things.
the
And then
TLTRO. So
a lot of
we
times
have
when
plenty of tools. Of
non-rich
course, we have the
people
whole,
are in good times, they
category
borrow
of
like
asset
crazy
purchase programs,
and they load up their
the PEP
credit
being
cards
one
and they
of them,
buy
and very specific to the
non-asset
pandemic
items, things that
circumstances,
don't
and as a
appreciate.
result being
So they live in a
temporarily
tiny apartment, but they
targeted
buy a
and
giant screen
proportionate,
TV.
in response
And then they
to
buy
the
an air
pandemic
fryer, and then
crisis.
they buy
Final point is
AirPods
also an
and
important
a
one
new
associated
iPhone.
with TLTROs
And a rich
is
person
the
doesn't do anything.
enlargement of collaterals
But
that
when
we have decided,
when
and
things
which
are
is certainly
bad,
helping
when the
banks to
economy
come
is
up with
bad and
more
interest rates are
papers in order
crashing
to
and
obtain
housing
financing.
prices are crashing and the
So,
stock market is
in
crashing,
terms of
rich people
PEP
borrow
as
as much
the
money,
best
not
possible
when
instrument
things
at
are
the
good, when
moment,
things are bad.
one
They borrow as
item
much
in
as
the
they
package
can
of
and they
tools
buy
that
everything
we
they
use,
possibly can. But
and
they
the
don't buy
size of which
new
we believe,
iPhones and they
as
don't
a
buy
governing
big screen
council,
TVs.
in
They buy
broad
apartment
agreement
buildings, they buy
is
houses, they
perfectly
buy
appropriate and,
stocks,
adequate in order to
they
respond,
buy
to the needs, I think,
currencies,
has
they buy,
determined to
and
us to act in
and
that direction.
those
I think
things
you
go
had
up
an
in
additional
value
question on DFR. And clearly,
and
we also,
pays for their
as a governing
Lamborghini
council,
lease.
decided that under current circumstances, clearly the PEP was the
And
best.
so now
instrument
she's
to
like,
use,
look, interest rates are
both
going to be
in terms
negative
of,
1%.
monetary stance, but also
And
in
people are
terms
thinking,
of,
well,
monetary
is my
policy
credit card
transmission.
interest rate going to be negative 1%? Of course not. But if
Next
you want
question
to
from
build
Mr. Arnold
or
from the
buy
Financial Times.
an apartment building complex with 1,000
can you
doors on it, you're going to be able to pick it up cheap because the asset value has dropped. And all your financing is going to be cheap because money is cheap, and the ECB or the Fed or whatever central bank is backstopping the credit market, so you can actually get the money to buy the housing complex.
Was that discussed by the governing
So you
council,
see what I mean?
And did you make a decision?
Rich
on
people
how to respond
love
to,
economic
the
downturns.
Germany
Who
side
lost
court?
their job
Secondly, can you
because of COVID? Rich
of
people?
deflation and
No.
why deflation could be such a negative.
In fact, if you own a business,
condition
so my
for the
buddy
Eurozone
owns a
economy
business here.
to enter. Thank you.
I think he does about 3 or
Thank you
4
very
million a
much.
year. It's
The,
not a huge business, but he's got
in relation to
a fair
the
amount of employees and
Karlsruhe
stuff. But
Constitutional
he got
Court,
PPP money.
decision.
Government gave him free money to
The
pay his
ECB,
employees.
as you know, is subject to the jurisdiction
That's
of
why
the
you want to own
European
an
Court
asset.
of
When things get
Justice,
rough, the government
Court of
says,
Justice
here's
of
free
the
money. We
European
want to
Union.
protect your assets for you.
Our
Oh, thank you,
PSPP,
government.
which was the subject of the Karlsruhe Constitutional Court,
You got to own
ruling,
assets, guys.
has been judged by the
A rich person doesn't own stuff.
policy mandate. So we have, all of us, have taken note
If you walk in
of
my
the
house, you're going to say,
judgment
oh my God,
uh,
it's empty. What the
passed
hell,
by
dude?
the Karlsruhe Constitutional Court.
It's like a
which is
museum.
directed at
Like, yeah, we don't
two
own
parties,
anything.
the German government and the
We
German
don't own
parliament.
stuff.
And we are confident that a good solution will be found.
It's true. If my house burned
which,
down
as I
today,
said already,
there's nothing I would
will
miss.
in no way compromise the independence of the ECB, the primacy of European Union law, and the decision by the European Court of Justice. What we have done at the Governing Council meeting, and that we do regularly whenever
Yeah. No, but it's true.
important decisions are made in terms
I don't
of
even own a car.
monetary
Why would
policy,
I own a car? What a waste of
is
money.
Debate.
I'm going to
and
take 50
assess
grand out of my
the
trading account
effectiveness, the
to buy a
efficiency,
car? For what?
and the cost
I don't leave. I work. Why would I?
one measure
I don't need
or
a
the
car.
other, and
Cars
the
are for
package
people
of
that have to
measures
drive to
together.
work.
So we have done that indeed.
I always think
This
it's
morning,
amazing because
as
normal
we
people
regularly do,
own a car,
and that
they pay
is
hundreds of
and will
dollars for
be
their lease or
reflected
their
in the
car
accounts
loan.
and indeed in the minutes.
They
of
pay
the
hundreds of
meeting that we
dollars in
had.
gas, hundreds of dollars
your
per year in
second question
maintenance
had
and
to do with,
tires and all that kind of stuff. And
deflation.
they wash their
Now,
car. They probably spend
We
$100
are
a year or more
focused
washing
on
their car.
the mandate that
And
we
then
have
they
to deliver
spend,
on. And our mandate is
let's say, at
price
least
stability,
an hour a
as
day.
defined
At
since
least an hour a day
2003, as
driving
you
to
know,
and from work. Probably closer
by
to
reference to
2
inflation.
hours a day. So it's 10 hours a week. That's 40
Close to,
hours a month.
but below 2%.
That's 1,000 hours
So,
a year.
Our inflation outlook
They spend
is a
thousands
very
of
important
dollars,
determinant of the
right?
decisions that
Thousands
we
of dollars, probably
make. We have
$6,000
single
a
mandate,
year minimum
we
on a
have
car,
a yardstick that
plus
measures it,
1,000
such time
hours a
when we,
year in
resume
time,
and complete
all
our
for the
strategy
privilege
review,
to work for
this
some
will remain
idiot.
so. Hence, when we see
It's right. It's just
an inflation outlook
amazing.
at the end
I'm
of
so
our
happy
projection
not to
period
waste
in
money like that.
2022 at 1.3, we make the determination that measures are needed, action is
Right.
necessary.
So
and
let's
we
say
do
I
so
save
by
at
using
least
the entire
$6,000
package
a
and
year.
selecting in the toolbox
Not
that we have,
driving
the
whatever people
instrument that
normally
would-
drive.
that will
What,
be
a
most flexible
Honda Accord.
and most
Okay,
potent
I don't own
in
a Honda
order
Accord,
to
so I save
help us
$6,000 a year,
return
plus
to the
1,000 hours of my
pre-COVID
time, plus
inflation
all
path
that kind of stuff.
that we had
So let's
known
say
back
once a
in
month
March.
I want
That's what we
to
do.
rent a car, and I have a $6,000 a year
The next
budget.
question from Ms. Bufacchi from Il Sole 24 Ore.
Okay. Hey, that's interesting, Crypto. I was looking at old pictures and yesterday, in fact, and I found one. I'm leaning against my first BMW, and it's a 3 Series, the 328i. And I'm leaning against it. I'm so tall and proud and thin and skinny and young and beautiful. And I'm just leaning against it. I'm like, I bought a BMW. It was good. Really cool picture. Love that. Seafoam green with sand interior. It's a gorgeous car and fast. Holy crap.
Enjoy very low sub-zero yields. And so can you explain why the ECB saw the need to stick to the German capital key in the past and the reasoning behind it? My second
Well,
question
keep in
is
mind,
on, European
Larry,
bank
that he's a
fragmentation.
syndicator, so that's
And
not the
you said also
proper
today how
language.
important it is,
I know what he's
for
saying.
banks to lend and to keep the flow of credit open. And there are many instruments you remember, Taltro.
But I like the
and
syndication business. I was thinking
TLTRO.
about doing
But for
something.
the banks,
I've talked to a few
it's not
people
all
about
for the
it.
same to deliver on this.
If
And,
they got the
state
B, I
guarantees,
got the will.
differ, sovereign credit risk differ.
I've talked to
and
multiple
some
people.
banks
I'm like,
are
if you
going
don't,
to have
if you don't
more
want to buy $1
problems
billion
to
a year, I don't want to
deliver
do
on
it.
lending.
And they're like, one guy said, yeah,
What can
maybe
the
in
ECB
September.
do?
So
Could
we'll
you
see.
buy senior bank bonds, for example? And if not, could you lend directly to SMEs? Thank you.
Yeah, Rab, huh? Financing
Thank you,
$1,000
thank you very
phone.
much to
That's
you.
how
to your
poverty
questions.
is created.
Let me just remind you what you know.
And by the way, think of it though. There's a rich
what I
person
would
that's
call the
deploying
dual
capital
key,
to bankroll that
of
financing project,
is.
to buy the phone,
You know,
charge
it's- on the
10%
one
a
hand,
year,
it
times
has
millions of
a
people that are
monetary
doing the same
policy
thing.
stance about it.
And there's someone
On
there
the other hand, as you
financing
know, because
all
that was
these
the one that certainly,
silly little things.
predominated in the early
and
phase
they probably
of the
don't own an
crisis.
iPhone. Or
It
at
is
least they get their iPhone
critically
free
important
because they
because
helped a
of its
million
flexibility
people
in order to
finance a
transmit
$1,000
monetary
phone.
policy,
But the thing is, if
in
you don't
order
have
to
$1,000
reduce
for a phone, then you
market
shouldn't be.
stress in order to avoid
I mean, my God, you don't have
fragmentations. But it
$1,000,
clearly
then don't buy an
has
iPhone.
those two missions.
Or buy
So
a 3-year-old
the PEP, as I said also
iPhone
earlier
or something,
on,
or
is temporary.
is that right,
is
Red? Yeah, like
targeted,
I don't even know if
and
that's
it's
legal
really
in the United
intended
States.
to deal
But
with
what
the
a great thing
pandemic
for a rich
shock.
person
It's
to
in
do.
response to that shock that it was put
Lend money to
together.
poor people to
And,
buy a
in order,
stupid phone that
to,
will depreciate. It's a worthless asset. And by the way, the
make
only
full
reason it's
use of that
$1,000
instrument,
is
we
Apple
have
says
to
it's
be
$1,000.
mindful of the
You buy
two
Apple
functions.
AirPods for
In
$400
response to the pandemic shock
They
and the
cost
resulting downward pressure on
$20 to
inflation
make.
and the medium-term
They cost
inflation
$400
outlook
because
for the
Apple
whole
says
euro
they're
area.
$400.
That's the
like,
response.
oy vey.
Financial conditions
me?
for the whole euro area are significantly tighter. It's not country specific. So we're now talking about the monetary policy stance.
Yeah. I mean, it's so funny.
And all
like,
of that is happening in a situation where
you know, and I work for
the
Apple,
recovery
you know?
is going to need easier conditions
It's just funny.
to achieve price
It's just
stability.
funny.
So PEP purchases.
Well,
in
our
all
buyers
euro
are
area
holding, guys. Our
jurisdictions
buyers are
needed
holding.
to further ease the general monetary policy stance, supporting funding conditions in the real
So, guys,
economy,
I'd rather you
especially
save
for
your
all
money
businesses and
and
households.
lend it
For the monetary policy
than,
stance, you need to use it
then buy that
across all jurisdictions. No question about that.
Here's
Now, when
my
it comes
phone.
to banks,
Here's my phone.
as I reminded
Chinese
you, the
phone.
TLTRO
It's
3
beautiful.
in its latest iteration,
I've had no
which was
problems with it.
decided
I've
in
dropped it
April,
multiple times. The whole
will
thing
begin
is
in
glass
June.
all the way
And we are
around.
very
It
confident
doesn't crack.
that given
I don't
the
have problems.
attractiveness
Cost me like
of the
$100
TLTROs
bucks.
and the
I had
rate
it shipped
that will
in
be
from China.
available to banks that at least
When it
maintain
breaks, I'll
their
just buy another
exposure,
one. What do I care? $1,000 on a
relative to the
phone? What are you,
benchmark that
mentally
has been
retarded?
decided. They
So,
will
anyways,
benefit from an interest rate which is
right?
minus
It's just, I would
1%.
never buy something
that
that's
should
not an
certainly
asset. Don't
help,
spend money on things
with
that are not assets.
reviving the economy, with
Right?
maintaining the credit
Don't
flow to both
buy things,
corporates and
invest.
households.
So
and
actually,
within
let's get on
corporates,
this because she
to
hasn't said
SME.
anything interesting yet. She's just babbling on like I am. So check this out. Wow, my processor is ridiculously slow. Okay, I'm just gonna have to turn off Lagarde. Okay. Wow, this is slow. Okay, we've talked about GDP in the past a lot recently. There's C plus I. By the way, look, bulls are right off my line, guys. It's not hard. So that's I plus G plus X minus M. As you know, that's GDP. Basics, right? Cool. What is this? This is consumers buying crap. Bart Simpson t-shirts, folding lawn chairs for the beach, $1,000 iPhones, even things like purchasing gasoline, leasing their car so that they can drive to their stupid job and waste 1,000 hours a year of their time. Okay? And by the way, if you charge $100 per hour, that's $100,000. If you charge $50, that's $50,000 of your time per year sitting in your car listening to the idiots on the radio. Okay, so I made my point there. So that's consumption. This is people. And by the way, if you're a people, you're poor. Years and years and years and years and years ago, I was talking with my accountant / tax attorney. And he said, Wayne, there are two types of tax systems in the United States. One for poor people and one for businesses. And I said, well, explain that a little bit. And he says, well, poor people, they don't own anything. Okay? Rich people, they own trusts. They own LLC. They own shares in stock, which are ownerships in companies, right? Rich people own things and they're businesses. So in the United States, there's poor people that pay 40% taxes out of their paycheck, okay? Plus get taxed on gas, plus get taxed on food, plus get taxed and taxed and taxed. Poor people probably pay 50 or 60% tax when you add it all up, okay? And then there's businesses. Because if you're rich, businesses, you own businesses. You own things, but you own a business. Like I said, this could be a trust, an LLC, or you actually literally own a business and you don't earn a salary. You own distributions, and distributions are not taxed at 40% like poor people's salaries. So what I'm talking about now is the I. Okay, I is businesses. So what does the I stand for? This is consumption. This is consumers. This is poor people buying crap to keep them happy enough to go to the factory tomorrow. So businesses are represented by I. So what is I? Investment. Thank you. Which means you're not buying crap, you're buying assets. And assets are supposed to appreciate in value and ideally produce income. What you're doing is you're trading, let's say, $10,000, right? To buy something that produces $250 a month. And because of this cash flow, over time, this should appreciate. So over time, this should go up, let's say 3% a year. And meanwhile, you're earning cash flow. And you can calculate the math, and over time, you'll get your 10,000 bucks back. And then after that, everything is free. So, right? So this goes up, what? Well, 10% is 1,000, right? So this goes up $300 a year. Plus you're earning $250 per month cash flow. Now this has to cover your expenses and stuff. But my point is over time, you have value. In 10 years, let's say 10 years goes by, you've earned, right, 3,000 of your dollars back in appreciation alone. Plus the cash flow over 10 years, right, which is more than $30,000 over 10 years. You see? And now you buy a yellow Lamborghini because those investments, and right? But your yellow Lamborghini is free. Okay? Because you're asked now imagine this is all your money. 100,000, a million, whatever you got. You've bought assets. You have very little. You have you have very little C, and you have a lot of I. You don't have any cash. Why? You converted all your cash into assets. You've invested. So you're very short on cash, so you live on the cash flow. Now, the appreciation part is good when you sell or when you go to borrow more. Because in 10 years, okay, your asset that you paid $10,000 for is now worth $13,000, okay? Plus, your renters, for example, if it's an apartment building, have paid your mortgage down. So let's say over the course of this, you have a $7,000 mortgage, which renters paid for, right? And now it's worth 13. So now you got this extra $6,000 you can invest somewhere else and increase your cash flow. So on and so forth. Thank you to the people that have done two things. Three things. They've lowered your debt, they've increased your asset, and they've done everything through your cash flow. So now you take that and you leverage that. And then you take that and you leverage that. And then you take that and you leverage that. Okay? But you own, right? You own nothing. You might have one TV. So I used to have kids come over to visit my kids, and they're like, "Where's your TV?" They'd come into our front room. There's no TV. And they're like, "Huh? Well, maybe in the great room." So they go in the great room, and they're like, "There's no TV." And like literally, we'd have kids like, "Where's your TV?" Like, we don't have one upstairs. Now we do. But back then, we didn't. They were just like flabbergasted. Well, TVs don't make money. Why would I want to own one? Get a phone, son. Get a phone. Yeah, no, like no joke. This kid, he was looking around like they're used to their house where they have 9 TVs. Every room should have a TV, right? In America, when you go into a restaurant, I don't care how nice it is. There could be white tablecloths everywhere, and they're going to have TVs on. Like, dude, seriously, come on. So anyways, TVs don't make me money, so why would I want one? The richest man in Babylon, that's interesting. Is that right, Rem? So you should have very little. You should, right? You should have very little consumption and lots of investment. Ross. What's up, Ross? Ross, are you in Chicago? I think it might be a different Ross. It was a Ross M though. Ross Moss. Maybe it was Moss. I'm thinking Ross Moss. Moss. Dublin! Right on. I have a friend isn't the right word, but I know somebody in Dublin, and he got married a couple of years ago, and he sent me a video like from his cell phone, and it was it's funny. I just drew a blank. Son of a. Oh yeah. So he sends me this video from his wedding because I'm like, hey man, just sending you best wishes. Hope you had a lovely day with your family and everything. And he's like, yeah, it was pretty good. And so he sent me a video, and it's Bono singing at his wedding. Bloody Dublin. And I'm like, you know what? You could probably get U2 when you're in Dublin. You're like, yeah, probably it's just a gig. You just go on Fiverr. You're like, yeah, U2. There was no Edge wasn't there though. Edge wasn't there. I'm like, well, it's not really U2. And then he's like, so at Christmas time, right? You go busking. I don't know if busking's the right word, but there's a little street next to a church, right? And everyone's in the street, and it has to do with raising money for children, either sick children, homeless children, something about children. And so he's on that board with the church as a big investor, and so is Bono. So they're friends from being on the board. And so anyways, Bono went to his wedding and sang, So anyways, I want to go to Dublin. Yeah, so you know what I'm talking about, Ross. Yeah. So anyways, I got a buddy that sits on that board. I know it sounds like bullshit, but it's true. I love U2. U2 is one of my favorite bands. Before they got preachy anyways. Well, I guess they've always been preachy. All right, so yeah. All right, cool. So I guess let's just run through the numbers. Oh, you saw him last summer? Yeah. I've seen him, I don't know, 3-4 times. But most of them are in the 90s. Yeah. All right, so let's just go through. Okay. Well, looks like technically we still have uptrends. What do you think? Do, 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 do. Go your own way. Cool. Even that. Yeah. Well, I guess I made a good call on Sunday, huh? So the whole reason, like, I get together with my swing trading group on Sundays and stuff, like, we were right here, and I said, everything comes down to being at the right place at the right time. I said the first hour of the first day of the new month, right? Now, do you believe me? It's amazing, right? You have to know when to trade. I like to trade at the very begin of the month. I like to trade at the very beginning of the week. I like to trade at the very beginning of the day. And I like to trade at the very beginning of a session. And if you don't get your timing right, you're never going to get the price you want. You're never going to get the trend you want, all that kind of stuff. Okay. Apparently, I'm using both now. This is MT4, but I have the same setup on MT5 now. So if you go to metatraders.com, when you log in, the first thing you'll see is download and install everything for MT4, or download and install everything automatically for MT5. So you click a button, and it says where do you want to install it, and then you go boom, done. 250 files installed in seconds. That's interesting, Reb. My problem with that is, like, when I see nice cars like that, they ask way too much, and you're going to say, well, of course not. But, like, I don't, me personally, I don't think I'd want to buy, like, a really nice salvage car, unless it was significantly cheaper. But when you find, like, it's 10% cheaper, I'm like, why isn't it 70% cheaper? But anyways. No, you don't have to reinstall MT4. Don't be ridiculous. It's just installing files. It's not a big deal. You can do it manually, but I found a lot of people had problems doing it manually, so I invested money, and now it does it automatically. In fact, I'll show you. I think I got it sitting around somewhere. Or do I? To double check. Oh, no, it's not it. Do I have it here? Maybe on the other PC. No. No. All I want to do be wow, wow, wow. No. Okay. So, So you'll don't download one of these. So I am running MT4. So you do this. So I'll open this up. Of course, you only get one, and just downloads that installation. So it's an app. Man, my computer is ridiculously slow right now. Oh, no, 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 no. What, did I click the wrong button? Okay, so you download an app and it immediately just pops up like that. So you just download the app. You don't download installers or anything, super easy. You click next and it says, where do you want to install it? So here's what you do. You go to File, Open Data Folder, and so you just need to copy the address of your data folder. And so your data folder opens up and you just grab this. See? Copy. Done. Bring it back and you paste. Okay, next. Install. See? Done. See? That's it. That just installed 200 files. That's it. Done. 200 files. Done. You reboot your MT4, so you shut it, start it up, and now you have all of this installed, and you have new indicators installed. So you got profiles, indicators, and you got new templates installed. So now you got all these templates. If you do the complete kit, then you have all these templates. But you know, everyone gets these and 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 these. Can't be any easier. Yes, you can. Sudin, that's why I did the custom indicator, or sorry, the custom installer, so that if you have 3 or 4 or 5 different MT4s, you can install them one in each of them. So I did that for you. Okay. Yeah, right on, Reb. Yeah, and I probably know the yards where you go to buy them. Anyways. So yeah, my computer's ridiculously slow right now. So right now, super easy. It's continuing, right? Just as you'd expect. So there's not even much to say. I don't know. Send me an email, Prince. When did you become a client? Like 9 months ago or 9 weeks ago? If you're on the old site, then there's a login for that. Yeah. Thank you, Jim. Wah, 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 blah, 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 blah. Yeah, you're probably on the old site. Oh, then then I don't know why you can't log in. It's not locking you out. Okay, sure. Well, Roger, are you a bull or a bear on global macro? That's all there is. So you would have caught that lira move, right? So that's a whole different site, Master Trader. Are you sure you're not mixing them up? But it's weird. I'll have to look at it. But anyways. So Roger, I'm waiting for your answer. Sorry, I don't have Nazi on this. Sorry. Daniel, you're interpreting what their next policy move is going to be. That's what you're looking for. So I'll ask again, Roger. I'm happy to do that, but I need to know whether you're risk on or risk off based on global macroeconomics. Yeah, but I think I know the service. But you can also go to the yard and check it. Right, there's a few of them. I forget the name of them, but I know which one. And I think I know the site you're using too. I've looked at them before, looking at like hail damaged Ferraris and Lamborghinis and stuff like that. There's some pretty interesting deals. And they'll tell you what the damage is and whether it runs or starts or whether it drives, right? Yeah, right on, Michael. Well, yeah, Daniel, we already know what the economy is. We already know that. That's what news reports are for. All right, so it's weird. Why does somebody ask a question and then leave? So I guess I'm not going to do. Yeah. It's weird. There we go. Thank you. All right. So you're bearish on global macro. Okay. Cool. Well, that's not my problem, Peter. Turn off your Norton. All right. Beep. Beep. So I was looking at this for a short, but that's risk on and you're risk off. So you want this to go up. All right. So let's switch this out template wise and say swing trading bullish. Okay. Okay. So you should have bought this yesterday morning or the day before. So you should have bought this Tuesday night or Wednesday morning. Okay, it's a pretty simple role reversal, pretty simple price action. You bought it at the M2. Your target is 77.8, 7.78. Okay. Pretty simple. Okay. Now, these charts are also telling me double top. So, as a bull now, you're a bear, but as a bull, this is telling me either most likely double top. if I was going to be aggressive, I would look to sell here, but not quite yet. I might have to wait till early next week. Because what I want to see before I sell it is I want to see rejection, and then like a move like that if I'm a bear. But you said if I'm a bear on this, which is risk on, you're risk off, so this was a pretty basic trade. And your target is right here, which is what the 55 EMA. See, this is predicting that, okay? And this is predicting that. So it seems to me they're probably right. Okay. What was wrong with the data? The data's awesome, guys. You have to understand that. The data's fantastic. So what US data yesterday would be bad for Aussie and Kiwi? Oh, my apologies, Roger, if I was rude. So what US news, Master Trader, would have changed Aussie and Kiwi? Help me understand. I'll make a comment. Because I don't know what US news you're expecting or discussing. Minions, more coffee! Apparently 3 cappuccinos is not enough. More cappuccino! Nimbus X. So I'll wait, Master Trader. Right? Yeah, I'm asking Master Trader a question. What U.S. news did you expect Aussie and Kiwi to change? I'm trying to understand your thought process so I can help. See? It's the economy. That's all. Aussie GDP? Well, that's backwards looking, so that doesn't make sense. You could break down the X minus M like I spent a lot of time training yesterday or the day before, and that's actually very positive for Aussie. Try it. No, but what? No, tell me, but you said something about based on the U.S. news. What news are you talking about? And I will try to help you interpret it. Right on, Rep. Thank you for that. I appreciate it. Okay, so Samuel B says U.S. balance of trade was bad. Okay, define bad. Because remember, there's no good or bad. There just is. Define bad. Was the U.S. importing more than they were exporting? Is that what you mean is bad? Remember, because bad does just tell me the data. I don't know what bad is. I don't know what good is. Well, we're kind of doing that right now, Dubé. Dude. Okay. Yeah, but see, Master Trader, you're not even defining what news you're talking about. I'm trying to even get that. Like, what are you talking about? And right? And I'm waiting for the balance of trade guy, whoever that was, Samuel B. What do you mean by bad? Oh, exports greater than imports. Thank you. No, imports are better are larger than exports. See, Samuel B., I want you to write this down. You ready? When specifically for the United States of America, when imports are greater than exports, that is good news. That's good news. So that would explain one interpretation of why did the Aussie dollar remain strong in the United States. The Americans import more than they export because they're rich. And hiring an American to do something costs too much. So they hire foreigners that are cheaper. So instead of buying an American OLED TV, they buy one from South Korea. And they get an LG OLED TV. Now, when you buy an OLED TV, you're not poor. So when Americans are filthy, stinking rich, they import more than they export, and the US dollar weakens when things are good. So you need to do a complete 180-degree turn on your analysis. Okay? It's very good news to have that data. Now, Master Trader's talking about ADP. Okay? For some reason, and I don't know how they come up with this, analysts thought, and it must be just pure hysteria, but remember, I don't watch news. I don't listen to the news. I don't read the newspaper. I don't watch TV. I listen to a little Bloomberg radio in the morning just because I meditate, and it's nice to have that going on. But all I know is facts and trends and facts. So I don't know how a professional analyst or a group of professional analysts come up with 9 million jobs lost for ADP. But that's what people are thinking. 7 million, 8 million, 9 million people in small businesses around America have lost their jobs. And it came out less than 3. So 3 million people, it was 2 something. But millions and millions of people losing their jobs in May is not good. But when people were pricing in 5 or 6 or 7 or 8 or 9 million, how do they come up with these numbers? Like, it's ridiculous. Did you do any analysis? Did they call businesses all around the United States and try to gather a sample size and then extrapolate it using statistical analysis? Or are you just guessing based on fear? I think it's mostly guessing on fear. So anyways, some people are like, it's gonna be 9 million. It comes out like 2.7. Like, so the ADP is wonderful, fantastic, incredible news. Not that almost 3 million people lost their jobs, but the market of idiots, right? And remember, 95% of people fail. So those guys are like, it's going to be 9 million. It's going to be 9 million. And it turned out to be a lot less. And then people are like, whew, well, risk on. Continue mission. Okay? Continue mission. Now, here's what it might mean if you want to, instead of the fear mongering that maybe the radical liberalist media, you got to throw that in there. If you want sort of an interpretation, how about this? Maybe it was 9 million. Maybe all the analysts did their work 2 weeks ago. So maybe the analysts started calling 4 weeks ago, like say at the beginning of May, and they started calling around small businesses all around the country, and they were actually doing analyst work. Now, I have a feeling they don't do any analyst work. It's like the chicken man. But anyways, let's say they actually did their job, And they're surveying small businesses that they're in touch with. And are you laying people off? Or did you get your PPP in time? You know, how are you handling the situation? Let's say at the beginning of May, it was 9 million. But more recently, with the openings around the United States, small and medium-sized businesses that don't have an HR department, that do use ADP for their payroll and benefits administration and their taxes and stuff, maybe they hired their employees back. And maybe this is an amazing opportunity, an amazing insight. Maybe this is your alpha that says, you know what, things were horrifically bad, but there is a new trend in town and it's actually very good. Maybe these small businesses are hiring their employees back as fast as they can. And we went from a negative 5 million or negative 6 million or negative 7 million 2.5 weeks ago. But since then, millions of people have been hired back. Okay, now, that's the type of data that's not released. That's the type of data that requires analysis. You have to have forethought. Let me give you another thing that you're probably not tracking. It's not ADP, it's not CPI, it's not ISM services. How about this? Did you see that statement by American Airlines? Hang on. Let's see if I can get this. Maybe my computer is really slow. It needs a reboot. Hang on. Let's see if we can find this. Let me teach you how to make money. Boom, bum, ba-dum, bum, 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 ba-dum, bum, bum, bum. Money! Yeah, see, I'm really lagging here. Holy smokes. Oh, for sure, eh? Oh, for sure. La la la. La la la. Ma 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 ma. No. No, 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 no. Probably here. Dum ba ba dum bum bum bum. Money! It's so good. This is all their fake news. How funny. I need the real news. Where's their real news? Maybe under investor relations. They're fake news. Money for nothing and your pips for free. Alright, so they're even burying this information, so you can't even find it, even when you're looking for it. American Airlines increases flights. Is this going to be... I want to get real news, not CNBC news. Whatever. I'm trying to get it from the source here. Check it out. American Airlines is increasing the number of flights by 65%. Why? Wait, no, that's not. That's their reduction. It's something that good. You know, I can't find it. So I'm going to have to go to... It's so funny, like, their press is so bad that they can't even... I got to find this. Let's try CNBC. Let's try. It's not the data. That was their reduction. Hang on. Let me get to it. And look at this, they're just replaying. Look, we just pulled up the actual press release, and all they're doing is redoing it. I can't find the data, but I know something. Can I tell you something even if I can't prove it here on the spot? A little birdie told me that they're increasing the number of daily flights by 75%. They're almost doubling the number of flights. 75, that's why the 65 caught me. The number of daily flights are being increased at American Airlines by 75%. Is that because people are fearful and not flying anymore? Well, Blue Boy, people say if Bill Murray was a supermodel, then yeah, he would have been my dad or something like that. Well, it doesn't matter, right? Marie says it doesn't matter because it's so small. That might be true, and I know what you're saying, but the thing is, it's happening. And is American Airlines doubling the number of daily flights because things are getting worse? Or is American Airlines nearly doubling the number of daily flights because things are getting better? You tell me. You have to interpret the data. Like someone asked earlier today, I think it was Daniel, like, when I'm reading central banking reports, what am I looking for? Information to make a decision. So what does this mean to your bias, guys? And by the way, you notice that you're not going to see that in PCE and stuff like that. I'm interested in data of all kinds. Okay? No, I know what you're saying, Maurice. I totally get it, but it's still a positive increase. Like you said, if it goes from 1 to 2, great. I understand that, that's 100%, but it's still pathetic. But it's still a positive increase in the right direction. That's not going to make me say, oh crap, risk off. I'm a risk on dude. I'm going to look at that and say, I'm right. But of course, I'm filtering too, right? Right, so Jim could also argue if bookings drop to 20% of normal, and now they're 65% of normal, Jim could argue that there's been a 300% increase in bookings. And that in the short run, American Airlines adding 75% more planes to their daily roster is actually a shortage. And what's going to happen is you're going to pay more for your airline ticket than you thought. And you're going to get on the plane and it's going to be full. Why? Because they only increased by 75% and bookings are up 300%, right? So unfortunately, you're not going to get that wonderful half-empty airplane anymore. Yeah, I'm not saying I like American Airlines. In fact, I don't like American Airlines. It doesn't matter. It's irrelevant. I'm a global macro trader, and this is relevant. Are Americans... Okay, let's go back. I'm predicting GDP. It's my job. C plus I... dang it. I plus G... It's a little laggy, huh? Plus X minus M. I'm predicting an increase in C. This helps me make money. Okay? So, let's say in the last few months. So last quarter, everything was pretty much down, right? Okay. So if more Americans are flying, consumption's going up, and therefore the way I interpret things, if more people are flying on American Airlines and other airlines, consumption for everything is going to go up. Starbucks is going to sell more coffee. Walmart is going to sell more junk. BMW USA is going to sell more BMWs. People are going to buy houses this summer. Okay, cool. They're going to drive more this summer. All of that. Okay? I probably not good. Probably bad. But relative to this, I don't know. I'll have to figure that out. G is typically stable, so you note that, right? G prime means the government came out with a budget. They're like, we're going to spend $3 trillion this year. And guess what? No matter what, if the economy is good, if it's bad, if it's sideways, it doesn't matter. They're going to spend the $3 trillion. But in this case, it was horrifically bad. So G prime actually went up significantly. Do you remember that the $2 trillion the federal government spent? Remember, the Fed spent 4, the federal government spent 2. So 2T, this went up, this went from, let's say, what's the annual budget? 3 trillion? Well, now it's 5 trillion. Okay? And then we have to watch exports and imports. And this is supposed to be a negative number, by the way. And if that's a negative number, it's actually quite good. Now, it changes the GDP equation, but I look at that more behaviorally than statistically. The United States, by the way, is one of the largest exporters in the world, if not the largest exporter in the world. So you're like, oh, but they're running a deficit. Yeah, I'm sorry. They're exporting trillions, but we import more because it's cheaper. Why does the United States not have inflation? And why do other countries have inflation? Well, we exported our inflation, aka our money, and imported stuff for cheap, which is deflationary. So we sent other countries, we sent Vietnam our inflation and imported stuff that the Vietnamese made cheaper than an American. Okay? So you have to understand your balance of trade. So like when you say things like, the numbers were bad, I don't know what the hell that means. What's bad? There is no good and bad. There's a number. There is no good and bad. You have to stop thinking like, CPI came out 1.2%. That's good. What do you mean that's good? Or that's bad. What do you mean that's bad? And then a lot of people say, that's bad, sell the dollar. And what happens? The dollar goes up. Why? Because you got it all backwards. Bad means up for the dollar. And you're like, bad, so they have to sell the dollar. Then you don't get it. So I don't know where you are, but there are literally people here, because there always is, the newer folk, they think something like this. Let's say that. News comes out and it's bad, and it's dollar news, okay? It's US news. And they look at it and it's bad news, so they sell the dollar. And that's 100% wrong. You don't understand jack about trading the dollar. Now, do I say that to insult you? No, I said it in a way that maybe I stirred a little emotion, but I'm trying to make a point. Okay? You need to stop. You don't know. You don't know. Okay? But you can learn how to know. Okay? Bad for the dollar, for example, okay, is this. not that. And bad for the euro is more complicated because it has partially to do with the USD. But bad for the euro is typically down. But not always, because the dollar is more important. So that's a more complicated one. Bad for the yen. What does bad for the yen do? It rises. The yen goes up when things are bad. You're like, Wayne, I don't get it. And when things are bad for the dollar, it goes up. You're like, what do you mean it goes up? But bad for the pound takes the pound down. And you're like, oh, whoa, dude. And bad for the CAD draws that down. And you're like, oh, I'm gonna faint. So my point is, you have to know what you're doing. And there is no bad. I don't even like the idea of bad. There only is, and everything we analyze is relative to another currency. That's why I'm saying bad for euro is complicated. Why? Because of the dollar. You're like, what do you mean the dollar? How can the Fed policy impact the value of the euro? Well, it's not necessarily the Fed policy impacting the euro. The Fed policy impacts global trade, global investment, asset prices, and relative deals in Europe. So if the Fed policy in the United States jacks up prices, asset appreciation, which is the policy of the Fed, then everything in the United States is too expensive. But you got all this money. So you buy a bunch of European companies for cheap. That's behavioral finance. It's not the Fed, it's the consequence of Fed on the market, and the consequence of the market on investment, the consequence of investment on investors, the consequence of investors in the way that they move their money. And guess what? The dollar weakens because now U.S. investors are like, I can't buy Apple at $1,000 million, right? At 1,000 years times earnings. So they're like, you know what? I'll take some of my money and I'll buy some Mercedes stock. Or you're like, you own too much Tesla, you made too much Tesla, you have to rebalance your portfolio, so now you got more cash and less Tesla stock, but the same valuation. So now you got like this cash you didn't have, and you're like, you know what? I think I'll buy some Ferrari. And you send your dollars into the foreign exchange market, the numbers of dollars in the foreign exchange goes up, the valuation of the dollar goes down, it gets converted into euro. There's less euro in the foreign exchange market. That increase in demand pushes up the value of euro, and that money gets deposited in a bank account in Europe, and then that gets converted into shares, and a broker is now holding shares and received money for the shares. Remember, Ferrari doesn't get the money. So anyway, so what happens is everything is awesome in the United States. People are too rich. So the euro goes up and the dollar goes down. And has nothing to do with Europe. And you're like, I thought bad news was bad. And you're like, no, you don't get it. This is the part. Bad news isn't bad because there isn't a thing about bad. There isn't good or bad. This is just money. You want good or bad? Go through your cousins. I'm sure you got good cousins and bad cousins. Okay? That's good. That's bad. This is just money. Okay? And money moves and gets converted. Your money is worthless. Your money is worthless. It's a store of value because it has potential worth. Okay? It's a store of value. It's a medium of exchange. It's a unit of account. If you don't even know what money is, you need to really go through the fundamentals course. Okay? So you can't eat it. So what do you do with it? You convert it. Okay? And if you convert it, by buying an asset, you'll be rich. If you convert it to buy something that's going to lose value and doesn't provide income, you're poor. Why? You just threw your money away. Okay? When the money crosses a border, so now this is about the I. When a business decides to build a new factory outside of its borders to get a better, favorable, let's say, operating environment, whatever that means, the value of the currency falls and the investment goes into the other country, which means they gather value. But does that mean in the first country where the money left, does that mean things are bad? Well, money can leave a country like Argentina and it's bad. When money is leaving a country like the United States, they are investing. They're not running for their life. They're investing their money and they're looking for productivity from the investment and a return from the investment. That's good for the foreign direct investment, the FDI. The country receiving the FDI benefits because now that money gets and productivity gets put in their own country. Okay? And that trickles down. But the country that made the investment, its currency weakened, but that's a good thing. You have to understand. So when you get a good number, in your mind, since you're using things like good and bad, you get a good number and then you're